Welcome everyone, another day, another video. Last one I talked about what's money. This time I'm talking about insurance. I think insurance is a very important conversation people need to start having. How many times am I going to see a GoFundMe open up for funeral expenses? Like, that's what insurance is for. You, you think when someone dies, no one's going to want to get paid to the morticians, you know, like the people who make the coffins. There's money that needs to be paid. And insurance, for the most part, will cover that. That's what insurance is for. People are, it pains me to see that people have to find that reality when they lose a loved one. Because, as I like to say, most people don't think past a year. Most people don't look past realistically and plan their life. Because if you plan, that means you would have had, for the most part, insurance. That's what insurance does. It allocates risk management. It's risk management. That's how insurance works. It's literally the symbolic relationship between insurance companies and consumer. The insurance company can rely on this income coming in to pay essentially the growth of their investments. This is how they grow to pay off those policies they pay out. And good companies can pay out all the time. Risk is, if something happens to you, we will take most of that risk. Little risk to you, big risk to them, which is why they have their requirements. That's why the requirements exist. Because they need to ensure that you're not just going to, well, one, you're going to be alive long enough for them to get a ROI, a return on investment, because of course they need to be allowing that to continue to play the markets, how financial services works. And they guarantee you, which is run by so many regulatory bodies, it's not even funny, so many regulatory bodies runs these things, to guarantee you get paid when something happens. Whatever insurance you take out, if it's life, if it's health, if it's what they have. I mean, you can get insurance literally on anything. All insurance is essentially is a contract saying, look, if something happens, I'll pay this much and you pay this much. That's essentially what it is. So this video is more so to try to bring awareness to insurance. I can't keep seeing GoFundMe. The average funeral cost $25,000. If you don't have $25K and you're not willing to self-insure, which clearly most of the people who's doing this don't, unfortunately, because you're open up a GoFundMe, then you should have insurance. You pay a small monthly premium, as they call it, and that premium essentially buys that policy for you. So when something happens, they pay for it. That's insurance. In the quickest 2.5 minutes I could explain it. There's two types of insurance for the most part when it comes in. At least I can say for sure for life insurance. I'm sure this can expand to others, but for the most part, this is what life insurance would do. You have term insurance, which is a specific term. You have 30-year term, 10-year term, 1-year term. Well, it doesn't go that far, but each year you have to renew that term. And each year your premium goes up because you get closer to dying. Because you're only renting this insurance. So, as you get closer to death, the likelihood of you passing away, unfortunately, goes higher. So, they have to charge you more to make up for that risk. So when people think insurance companies are ripping them off, no, this is how they think. This is why you need to think what they think. Now, of course, it can always be abused, but that's why all our regulatory bodies exist. So they can, and trust and believe, they can. And there's not like, there's some stuff, but there's a few you're not gonna be able to get away with. They check too much, and of course, there's always gonna be corruption, but for the most part, nah. you get a good company, they'll pay. That's what insurance is. It's a contract essentially. And you have permanent insurance. You lock in a premium. Normally it's a level premium, as we call it. Level. It stays level. A level premium, let's say you get it at 25, that premium that you're paying stays your entire life. It won't change. It'll be a little bit higher. And yes, it inevitably builds with that premium you're paying. A portion of it goes to the actual insurance of, let's say, your life or disability. Any other goes to cash value. And that cash value is used to play the markets. That's what they use that money for. Which is why if you want to borrow from it, they charge you interest on your own policy. Because if they're relying on their books that they can invest this money. It's a very big deal. Give me a second. This is bothering me. It's a very big deal for them. Because they're dealing with billions of dollars. A percentage point off is huge. So they can't make mistakes like that, which is why they're so risk adverse for the most part, especially as a company gets bigger. So with that money that they get, they do the markets, they guarantee a certain interest that you'll get, and they make as much as they can, as safely as they can. And a good insurance company will be able to normally make at least double, which will be amount, hopefully 6%, 7%. You get your 3%, they get their 5%. And it keeps building. Now, don't get me wrong, it could be different, depends on the contract essentially. But you could get more, you could get less. But for the most part, that's how this symbiotic relationship works. You put money in, they invest, they pay you, or their shareholders, if it's a stock company, or a mutual company, they'll pay you. And then it builds on itself. They make their money. They want their money, of course. You make your money, and everyone wins. As long as you have great advisors who are managing that money and doing well, then at the end of the day, everyone's eating. That's how the game works. I think it's important for people to understand that's how this entire thing works. So that's why permanent policies are normally better. They're more expensive, normally. I'm not saying all the time. Like I said, this isn't financial advice. Everyone's different. You will have to see your particular plan that will give you the right particular insurance that you would want, you would need. However, for the most part, wholesale, you own that policy, you own that asset, and it turns into an asset once you pay for it all. Once you pay all the premiums, you can get what they call a term 65. I mean, not term 65. Oh my gosh, a limited term policy. That's it. Gosh, limited term whole life policy. And you can get to 65. You can pay up all the premiums up to how much you have the policy out. And once you have it paid up, it's yours. You can sell it to someone else by a bidder. You can do a lot of things with it. You can take out a loan on it, which is what a lot of our clients, or not clients, but a lot of people, some people do. The rich, that's what the rich do. When they can't get a loan from a bank, they'll just, all right, let me go to my policy. What's the interest rate in that policy? What 3%? What are you offering for it? All right, we'll take the policy. Let's go. That's the utility that comes with it. And not including the tax savings. Insurance grows tax deferred. So you pay no taxes on the gains. It's another reason why I don't have a wholesale. These are the reasons why insurance is important and is vital for someone to do a financial plan. That will be one of your safest investments. And then with that safety net, what can you do? You can be as risky as you want to be if you want to invest, if that's what you want to do. This is what the rich think. The people who have a lot of money, this is what they think. They build their safety net. They build 8 of these. They get 8 policies on all different types of things. Kids, everyone got it. They're paying into it. It grows tax deferred. And then they invest outside what they want to do. That is a very quick rundown of insurance and why it's important. And trust and believe, I can't wait to get it for myself. Because I see the value of it as well. So, sorry, there's a car, so I'm looking over there. But that's a video. I hope it was informative. These are the type of videos I'm going to start putting out. I'm going to be educational. and teach, because people don't know this. How many GoFundMes do I have to see? So I'm out. Thank you, guys.